Ever seen 5 indicators saying buy, but the price continuously keeps falling? That's like checking 5 different weather apps, but ignoring the thunder just outside. Let's fix that today. Hi, I am Pranav K, an NISM-certified trader and trainer, and your friendly guide at Stockshaala by Kotak Securities. Before we head into building or understanding how profitable traders build setups, there's something more fundamental that we need to understand. And that's about giving more importance to structure and then giving importance to indicators. Structure first, indicators later. Always. You might ask me, Pranav, you always keep talking about structure, structure, structure. But what exactly is market structure? Market structure involves a couple of things. Number one, it could be your trends, which is higher highs and higher lows, your support and resistance zones, your breakout or retest regions, and finally the fourth one, that is consolidation ranges. See, the thing is, structure tells you what the market is doing, but whereas indicators only suggest why or how strong. Here's an analogy to help you understand this concept better. Imagine you're building a fancy castle. But when you're building this castle, you're thinking of decoration even before the construction is completed. It's like buying curtains when the walls and the windows are not even built. Does it make sense? Absolutely not. Similarly in trading as well. If you use indicators without structure, it means there is no meaning. So it's always important to first give importance to structure and indicators always. Here's a real example of why structure wins. Let's say, for example, the price is in a clear downtrend. And then RSI is also in the oversold region, which means the value of RSI is below 30. What do most beginners do in this case? They buy because the RSI is low and they expect a reversal. But in reality, what does price do? It keeps falling. Why? Because the structure is bearish and RSI is just a minor data point. You can't fight the tide just because one of the waves looked small. So here's what pros do. They mark support and resistance zones, identify trend direction. Third, they observe the price behavior at key levels. And fourth, that is when they are going to add an indicator for confirmation. I call it the SFI Principle. Structure, flow, indicator. And that's exactly how the order should look like. Why indicators can mislead without structure? Let's look at few examples. Number one, RSI can stay in the overbought region for a few days to a few weeks if the market structure is very strong on the bullish side. Stochastic can also give misleading signals. MACD might have multiple crossovers which might lead to confusion. But structure is always going to make sure that you're looking at it clearly and it's always visible. So don't be a trader who sees the forest fire but waits for the smoke alarm to ring. Next, let's understand how to train your eye for structure. As the age-old saying goes, practice makes the man perfect. So here are a few things that you can focus on and practice so that your identification of structure becomes better by the day. Number one, spend time with naked charts without any indicators and keep observing how the price moves at every instant. Take out some time every day and practice to draw support and resistance along with trend lines. Look at how price behaves at key levels of support and resistance. Only after you have done all these things, then use indicators to confirm what you have seen. But if you reverse this order, then the markets will always keep tricking you. So here's a quick recap of what we have learned so far. Market structure equals the skeleton of price. It includes trends like higher highs and higher lows, support and resistance zones, third, breakouts and retests, and finally, consolidation ranges. Always look for structure before indicators. Indicators equals support tools and not decision engines. The structures show intent but indicators show confirmation. And finally, practice naked chart reading and then add layers. So, if price is the story, structure is the plot, and what about indicators? They are just the background music. Now that we have completed the fundamental of structure and indicators, in the next video, I'm going to show you step by step of how to build a trading setup. You're watching Stockshaala by Kotak Securities, and I am Pranav K, and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.